Hey, what's going on, family? Back at you with another video. Okay, so today what I want to do is I want to just help somebody, giving free information, giving free value. Um, I love giving free value because I don't believe in just holding things. It's the new year, and I want to be able to help you, along with your journey. Or it may not help you, it is what it is. First thing, and this is what I told my team. You have to have a plan going into this new year, because what you did last year and you still not profitable, you need to let that go. Fresh start, fresh mind, and fresh plan. So if you have a plan, say if I got 1,000, 2, 3,000, 4,000, 500, 100, you have to have a plan to get to where you need to get. It's okay. Yeah, you can have your vision, but if you don't have nothing written down on paper, or if you don't have nothing saved, or no rules or no structure, and you just got the vision, then your vision is just a thought that you want to get to, but it's not nothing that you're working through. So you have to have a plan going into the market. You know what I'm saying? So make sure that you're planning. And let me show you part of planning is how you're back testing. Are you back testing correctly? A lot of people don't really know how to back test correctly. Or are you still hanging with them same people that is taking your time up? Are you still watching the same shows? Or are you still going to the same places? You know what I'm saying? And are you sacrificing time for yourself? Are you focusing on one strategy? Or are you learning why you keep losing? Or are you learning of why you keep? This is all part of planning. And you need to have things organized to plan to say, hey, look, every time I look in the market, before I come to the market, I need to meditate. I need to calm myself. So these are things that you got to think about, because people always get, oh, it's a new year. Oh, I'm going to do this. I'm going to do. Nah, I don't wait till the new year. I start now. So it's the now. It's now or never. Um, it's a question I always ask. I said, why do only 10% of people, people say 5, some people say 10, but I'm going to say 10. Why do 10% of the people become profitable at Forex and stay profitable, and a 90% lose? Planning. You have to plan. You have to have a plan. You have to have a plan of what you're going to do, and you have to have great risk to reward. You have to have risk reward and not over leverage it. If you can master risk reward and having great leverages on your account, I promise you, you will be profitable and successful in the market, of course, with a good strategy. So here, this is what we're going to do. So we're going to go here. Let's find something. I could use this right here. So when I come into the market, one of the first things that I like to do, let me show you, is I like to zoom all the way in so that I can get a clear view of what's going on in the market. So once I have that clear view, I need to see which direction is market structure being broken into. And the 1 hour is my higher time frame. So I need to figure out where is structure being broken in which direction on the higher time frame. So as I look at this right here, let me show you, as I look at this, I see structure, because you got to understand the market has been trending up for a long time. This is on a 1 hour. So once the market, it has been trending up, look, this is a long time. So let's see how many pips that the market has been trending. Okay, let me get this off. So from here, I'm gonna bring it down. Look, let's see how long market's been trending. See that? So this is a 2,000 pip move. So the market has been going up for a long time. And the market is not going to keep feeding people on the buy. So at some point, the market is going to go down. So now, let me show you. Get it out. Let's go. So once I see structure being broken to the downside, look, and if you have a hard time, just switch to your line chart. And you can see structure is being broken to the downside. You see structure being broken here. You see some structure being broken here. Now I'm confident that we're going to the downside because we've been trending up for so long. So when structure start breaking to the downside, I'm like, yeah, okay, but now I have to know where price is going. See, this is part of my plan. I have to understand where price going. I have to understand my rules. I have to understand my focus. I have to understand what I'm looking at. I have to understand gaps inside of the market. So once I see it's breaking structure, I'm not saying, okay, I see it breaking structure. This is what I see, but I have to confirm what I believe is already on the downtrend, right? So I got to see where could price go. See, we have gaps here that needs to be filled. Let's see if we got more gaps at the bottom. We have gaps here that need to be filled. So we have gaps here. We have gaps here. And price has been trending up. So these are key areas in the market that needs to get filled. So with me knowing that, we have a big push in price right here. I always a big push because the big push always tells you a story. The big push always means something. So when price pushed down right here like this, and then it broke structure, see, this is structure. This is structure being broken. This is slightly little structure being broken. Look, just put on your line chart. See, this is structure. This is structure. This is structure that is being broken to the downside. So sometimes people have a hard time spotting it. That's why I say put your line chart on. So once I see structure being broken to the downside, I know there's gaps to need. And then let's go look at the top. See? Also, you have gaps here that needs to be filled. So this could be a lower probability setup. But we also see, this is how you got to think about it. The market has been going up for so long. So I know that the market needs to correct itself. So now, and I see structure breaking to the downside. So now I'm a little bit more confident that price is going to continue to the downside. Okay. So where the big push started at, I see a big push, and this is a low probability trade because there's no gaps. The gaps have been filled right here. So since I know that it's a low probability trade, I'm not going to risk as much. That's part of my plan. See, I have my notebook right here. Part of my plan, if it's a low probability setup, I need to lower my lot size and aim to get less pip than I originally do. That is part of my rule. You have to have a plan. If you got a mentor and your mentor is not helping you come up with a plan, telling you, price comes back up. So when price come back up, we have rejection in this supply area, right? But you got to understand this is a lower high. See, this is a lower high, this is a lower high, and structure is being broken. So when I come in, I'm making my entry off this supply area. And my TP1, this is my TP1. My TP1 is here. That's my TP1. And we make an entry, see? And voila, and price goes down on that one candle. My team note, we enter off the break of the candle. I set my TP a little bit above this wick, you know, and we don't take our entries on an hour, but I'm just showing you example. We take it off the 5 minute. That's too high, 43 pips. I don't want to risk that much. So I'm gonna break it down here just for the example. The most I like to risk to me personally is about 20 pips, and really no more than 20 pips. And TP1 would have been here. This is my TP1 in this area. That's 32. So I'm willing to lose 21 pip on this trade to make, I'm doing the 1 to 5 because I'm using an example on the 1 hour, but we normally take it on the 5 minutes or the 15 minutes. And you see how when price rejected, price shot down, you up out the market, and let's see what it does. Let's see if it dropped, and now price pulled back. So price gave you another move. It gave you another move. Price came back. It rejected, and you could have bought again. And price continues to shoot all the way down. How I know price was shooting all the way down? Because price has been trending up way too long, and there's gaps in liquidity. See, these are gaps that need to be filled. See? Fill it out. See, price could go back up. Okay. Let's see what price want to do. Price is playing around. See, at this point, we up out the market. This is why we don't stay up in the market, because you get a lot of this. So this is why you got to get your pips. So this is more like a consolidation. And voila, price went down. And when price went down, let's see why price reversed that here. You have to know why price do what it do. So me, let's go get our horizontal, because I need to know why price reversed that area. See? This is why price reversed at this area. Why? Because it filled the gaps that was right here, and now price broke structure, and now price is pulling back. See? Price is pulling back to a key level. So what I'm saying is you just gotta have when you're doing it and you see price drop. So when price came back, you see price came back and dropped in that area. So price comes back, price giving us rejection. But I think honestly, price is probably gonna go up to the upside. Let's see. Or is it finished getting what it needs at the bottom? See? And price continued to go down. It wasn't. Price broke structure. And price continued to break structure. We get a pullback up to this area. Let's see if price continue to go back up. All right, price went up. Price went back into the zone again. And remember, and this is where price is at now. Remember, I told you it's going to go back up. Why? Because when price came but filled this gap right here, when price came back to fill this gap and price pushed down and price came back, price came down, it already filled what it needs. So that's how I knew at some point price is probably going to blast through this, go back to the upside, and we can start looking for buys in the market. So I want to leave this video. I hope it really helped you to kind of get a perspective. Make sure you plan it. Make sure you writing things down. Make sure you in contact with the right people. And just make sure you got a plan. Make sure you got your rules written down. Make sure that you understand yourself why you're over leveraging. Make sure you're cutting certain people off. Make sure that you're on a positive note, and make sure that you're not over leverage and have good risk to reward. Because, like, let's do an example real quick. If you got $500, right? The lot size that you shouldn't be using no more than this. A 0.10. You shouldn't be using no more than that. And that's just the reality, because if I lose with this 5 times in a row, my account is still good. You know what I'm saying? So that's why you always want your reward to, that's why you got to have good risk to reward. You know what I'm saying? So you don't want to, people, we live in a time now where when you see people on this market making thousands, or you may see me, flipping an account, it's because I've been doing it for so long and I have understanding. But it's okay to make money. I was happy with making $8. I'm happy with making $6 or $5, because what you want to focus on is winning and being consistent. And then when you focus on once you focus on winning, then you can start figuring out your lot size. But the main thing is you want to have a strategy and win. Don't think about how much money. Don't think about none of that. Think about winning. And once you think about winning, then you can start. Until then, use very small lot size to protect your money. But like I said, until next time, y'all stay safe. Y'all stay, prayed up, stay blessed. And until next time.